If you're trying to escape the financial system, retire early, and build real generational wealth, but you're terrified you end up trapped in financial purgatory, working forever because you never really learned what it means to get ahead, then this video will teach you the single most important mental shift you need to make that separates the wealthy from everyone else. This is the exact fear my friend Maggie had. She watched her mother work into her late 70s with no savings, no investment, no safety nets, and no way to retire. And she was terrified that was her future too. Seeing my wife and I escape the financial system and retire early, she came to us for help and advice. But her question wasn't, what's the next hot stock I should buy? It was a much deeper, more important question. How do I solve this problem so I never end up like my mom? After this video, you'll go from thinking like someone who is a victim of the market to thinking like a millionaire who uses market panic while everyone else is trapped in short-term fear and panic, just trying to survive until the next crisis. This is an important mental shift because it puts you in a position to achieve what I call escape velocity. And this is the point where you break free from the gravity of the financial world. You break free of your debts, your obligations, the stress of the financial system. This is your first lesson in thinking like a millionaire, and it starts now. This is the 200-day gold switch. Let's get started. So why do you need this strategy to achieve escape velocity? In my previous video, we talked about how you can use the 200-day moving average to control your risk, protect you during a crash, and use it to beat the market. I've been beating the market using that strategy for over a decade, not only with my long-term investments, but with short-term trades as well. I strongly recommend you start using the 200-day to control your risk and beat the market. But what do I do? Because inflation isn't going away. It's probably actually getting worse. Now it's time to make sure that we at least keep up with inflation while we look for opportunities to keep our money growing. This thought process, this is the difference between those who are able to escape the system and those who are stuck living from one crisis to the next, just trying to survive. Once you control your risk, you put yourself in a position of opportunity. Short-term pain and fear can be huge opportunities for generational wealth. Pro tip, here's the thing about market crashes. Investing is a zero-sum game. When the market crashes, the money doesn't just disappear. It goes somewhere. It moves from stocks to something else. Because I can promise you this, professional investors, institutions, the people with 3 commas in their wealth, their money is not sitting still, bleeding away to inflation. So the question is, where is the money? The plan is follow the money. And this is one of the big lessons that I learned that changed my life and helped me achieve that escape velocity. Follow the money because money attracts more money. And where there is money, there's opportunity. So when you follow the money, you find opportunities. And that's what you're looking for. Opportunities to make your money grow. Go where others are making money and make money with them. Okay, that sounds great. Now, what do we do now that we know why we need to think this way? So what we do is you need to keep your money moving. And my recommendation is gold. You put your money in gold when the market starts crashing. So how does gold get us closer to escape velocity? Well, if we look on the chart here, we're going to go through a couple of examples real quick. We're going to start with the dot-com crash. On the top here, we have SPX. This is the S&P 500. The gold line on top represents the 200-day moving average. On the bottom, we have gold futures. We're not working with the ETF here. We're working with the actual index and the actual spot price for gold. And this is the proof of concept. So what we can see here is Monday, 25 September of 2000, the strategy would have executed a sell signal somewhere around the 1445 number. And what I'm proposing you do now is, great, you sold here. But what you should also do is move your money into gold and buy gold there. So let's look at what would have happened. We would have sold at 1445 and we would have bought gold down here at 275. Well, let's fast forward to the point where our strategy would have told us to buy back into the index, which is when price closes above the 200-day moving average. And that is on 14 April of 2003. So about 2.5 years later, we would have bought back in. We would have bought back in at 882 and we would have sold gold at 326. That means our gold position would have increased by about 12% when we sold. So at this point, buy and hold investors are down over 30, maybe 40+%. They're underwater. We use the 200-day strategy. You would have seen some losses for sure. You would have lost 8 or 9% here. And then you would have been able to get back on board and started making money on the way up. However, using the gold strategy, not only would you be now buying back in near the bottom of the market in a position to ride the recovery back up, but you'd be buying back in with more money. Your money would have never stopped compounding. While everyone else was losing money, panicking, watching their savings bleed out, yours kept growing. Ultimately, over this time frame, the 200-day strategy would have returned 31%. However, using the gold strategy, your returns would have ballooned to 42%. You made 12% while the market was bleeding out, and then you caught that full 31% on the way up. Versus again, buy and hold, you made nothing. You just spent 7 years losing money. So let's go to the Great Financial Crisis. We're looking at the Great Financial Crisis here. We're going to do the same thing. Using this strategy, in December of 2007, you would have sold your S&P 500 position, and now you would have bought gold. You would have bought into gold down here at 841. Then following the 200-day strategy, you would have bought back into the market not quite 2 years later, July of 2009 at 882. However, your gold position moved up from 841 to 952. Again, that's about a 12, 13% return. So while everyone else was either panicking, watching everything bleed out, or selling at the bottom, or sitting in cash, your cash kept growing. Now you're buying back into the market at a lower level with more money. Your money never stopped compounding. So during the Great Financial Crisis, buy and hold had a drawdown again of greater than 30%, close to 40% at the bottom. The 200-day strategy is a great risk management tool. You would have seen about a 12% drawdown in your account. And that's about the ceiling for drawdowns. Total returns for this strategy over this time frame, from December of 2007 through January of 2013, buy and hold, again, they're at break even. Congratulations, you made no money. You just survived a market crash. The 200-day strategy, you would have made about 25%, including these sideways periods here. Using the gold strategy, you would have had a total return of over 43% versus break even with buy and hold, or even 25% from the 200-day strategy. Now, if you applied this same strategy to the entire part of the century that we've experienced over the last 25 years, when price moves below the 200-day moving average, you sell your position in the index and you buy gold, you would have returned 700%. So over the last 25 years, the S&P 500 has returned 315%. Using the 200-day strategy, you would have added 88% to that and gotten right at a 400% return over the last 25 years. Definitely getting you ahead of the market and getting you closer to retiring on your own terms. But if you had taken that same strategy and all you had done is when you sold the S&P 500, you moved your money over to gold, your returns would have exploded to nearly 700% over the same time frame. This strategy would have returned 696%. Ladies and gentlemen, that is what a wealth transfer looks like. That's what compounding looks like. That's what happens when you keep your money compounding year over year and you don't have those drawdowns. So make the decision to start that compounding now and download the 25-year backtest I put in the description for the gold switch strategy. Check the link in the description down below. See how the strategy performs. See how it compares to buy and hold and the 200-day strategy. See for yourself what it looks like to achieve exit velocity and see what that blueprint can look like for you. Check the link in the description below. Start those decisions compounding today. This is what smart money does. This is what those with financial freedom do. During times of crisis, they don't tolerate losing money. They don't tolerate risk. They control it, they look for opportunities, and they keep their money going in the right direction. This number is not the result of a system that you don't have. It's the result of a mindset that you haven't achieved. It's a result of thinking and solving problems like someone who understands how the financial system works. You control risk, you have a plan, follow the money, and take advantage of the opportunities that the system presents you. If you want to keep your money compounding over time, then first your decisions have to compound over time. That means having a plan to make the correct decision when something happens, and then making a correct decision on top of it. Taking the opportunity that first correct decision gave you and doing the same thing again, looking for another opportunity to make the correct decision. Your decisions are now compounding and your wealth will too. So a question I get from people when I've helped them along the way and they've started investing and thinking like this is, how can that gap be so big? How can that strategy double the S&P 500? And it's because the compounding never gets interrupted. That's what keeps you stuck in the system. There are times where your compounding gets interrupted and you lose money. And that's what escape velocity is. That's how you achieve it. The amount of capital you have to work with to solve the problems that come up in your financial life gets bigger and bigger until it gets to the point where you have enough capital, you have enough assets that you can literally solve any financial problem that comes up in your life. And when you do that, you are now able to all of a sudden start making different decisions because you don't have to worry about what if I do this? What if I make this decision and then something happens? What if I make this decision and then I have to get a car? What if I make this decision and then I need surgery? What if I make this decision and then my kid goes to college? I can remember today what it felt like sitting down with my wife, thinking through the position we were in and realizing we can do anything we want. Maybe we can't go out and buy a plane today. Maybe we can't go out and buy the Dallas Cowboys, but we can do anything we want. If we want to travel, we can travel. If we want to move to another state or another country, we can move to another state or another country. And everything else is going to be taken care of. We can do pretty much whatever we want for the rest of our lives. And that's something that I hope you're able to achieve. That's something that I hope that anyone who wants that life and anyone who wants that freedom is able to achieve, because that's how we're meant to live, free. The goal is not just to make money. The goal is to learn how to build wealth, learn how to acquire assets that make you more money, that can acquire more assets that make you more money. It becomes a positive feedback loop. And this strategy can be your blueprint for not only achieving that escape velocity, but for understanding how to think. So today was another lesson in thinking like a millionaire. Learn to follow the money, see market crashes as opportunities, and use the gold switch to position you to take advantage of those opportunities. And if you want to see exactly what this looks like in real time, watch this next video. We're going to go through the tactical rules for entering positions, exiting positions, and adapting a strategy to fit your style. But before you go, remember, start your compounding today. Check the link in the description, get that 25-year back test of the 200-day gold switch strategy, and see how it can be your blueprint to start down your financial path and get you closer to whatever your escape velocity looks like.